Gold prices continued to drop today after coming under pressure following the temporary truce between the U.S. and China that was reached on the weekend. The precious metal is still up over 20% this year, hitting several record highs and touching $3,500 U.S. an ounce last month. For more on the outlook on gold, let's bring in Frank Holmes, CEO and Chief Investment Officer at U.S. Global Investors. Thanks for coming in.
Well, it's great to be with you.
Do you think there's more pressure here for gold if these talks between the U.S. and China actually formalize and move forward?
I think that what you can learn from the Bitcoin ecosystem is they love the word hodl, hold on for dear life. Buy the dip in gold and hold on. I think that's what's really important. The dollars it's inversely related to the dollar. That China is going to continue to do the assault on de-dollarization. They want trade to be with the yuan. And for them to have any credibility, they're buying gold. The only way other countries will trade in the yuan is with gold backing. And so we see now China's the biggest gold producer, China's the biggest buyer of gold, and now we're seeing other central banks around the world with this big push to de-dollarize the dollar. But behind that comes July 1st is Basel III. And Basel III is sort of the international banking regulatory trade book. And it's now going to characterize for U.S. banks, gold will not have to be held at a 50% discount for a reserve. It's going to be treated just like cash.
How significant is that?
It's very significant for banking reserves. And the more conservative a bank is, the central bank, they buy more gold. And the bigger money center banks all of a sudden would be able to have gold as a liquid asset. And I think that this will just, as part of that whole adoption of gold, will only continue
down the road. So let's talk about value. Will that add to the value of gold, just generally speaking? You think you'll get an automatic bump in July?
You could, but I think more important is, rather than just try to play the bump, is that I think on this cycle under President Trump, we could probably see gold run to $6,000. And I think it's very doable because we see, when we look at China and India and U.S. Global, we believe that government policies are a precursor to change. So we track monetary and fiscal policies of the G20 countries. Then we look at populations. So when we look at China and India, it's 40% of the world's population. There is a cultural affinity for gold. Their M2 money supply is ripping up at 10% growth. Historically, that has always been a lead for gold, and now recently it's become a Bitcoin phenomena of just lagging behind the M2 growth. So we're seeing this come out of 40% of the world's population, and I think that this is another scenario that this exercise that monetarists love to use is called modern monetary theory, and that's what the Prime Minister of Canada was known for as the head of the central bank here, and in England was the application of modern monetary theory. And since that's been instituted by the G20 central bankers, you've seen gold just continue to rise and rise and rise. Over this century, gold has been positive 84% of the time. Okay. You wouldn't think so.
But I was going to say, because people were moving away from the U.S. at the start of the year, and there are lots of concerns about what was happening out of Washington, you're not really fazed by that, as far as it affecting gold or putting more pressure on it.
No, it's short-term noise. The real fight is, and it will continue between the U.S. and China. So he comes out, Trump, and goes after everybody, and then quickly turns around, backs away, except for China. This is just gamemanship, game theory. You can read The Art of the Deal, and you can see this is how it's playing out. But really, the great concern is, why does China have 5 iceberg breakers? Like, why are they doing this? Well, they believe the Arctic Sea, they have the rights to the Arctic Sea for shipping goods. They tried to buy an old World War II seaport in Greenland that the U.S. built. So there's a lot of tension that you're seeing on trade. And what they also forget is that China launched what's called the One Road, One Belt around the world. And over 125 countries have been lent $2 trillion. And with that comes along that you have to be anti-Taiwan, and you have to take away democratic rights, so supporting people like Maduro in Venezuela and other countries. So there is this concern on democracy being the Trojan horse is China, and I think this is what the battle is. It's too bad that Canada and Mexico gets pulled into this big debate and discussion, but I think big picture, that just lends gold as the fear asset that gold should be in everyone's portfolio.
Okay, so then how would you invest in gold at this time? It's pricey. People want to get in, maybe not at that price. How would they do it? What would you advise?
You won't believe the data points. There's actually been redemptions. Only recently did we start getting the past month. On April the 2nd, they call Liberation Day, is when actually money really started to pile into gold. Gold stocks have been under pressure. It's strange. The gold stocks made all-time highs when gold was $1,500. Now it's $3,400. So I think that gold stocks are the cheapest buys. The best are the Canadian buys. They're more volatile. They have complete different corporate governance. You're seeing buying back their stock, like Newmont buying back their stock. You're seeing Barrick all of a sudden leave the head office to go to the U.S. to get into the S&P 500 for that more liquidity to get a bump in their stock price. I think we're going to see the Canadian gold stocks are going to show spectacularly well over the next 3 years.
Do you see crypto being a challenger to gold at all more down the line?
I think it's just it's another decentralized asset. Both are portable, but 50% of the world wants something tangible. They want to wear the gold. The other half will accept something that's digital, like mileage points. I can transfer my mileage points to you. So I don't see it going away. But what I do see is that millennials and Generation X, Y, and Z, they're very much they're accustomed to digital format.
Yeah, they're more comfortable with it. And
when we see in Paris, I was there 2 weeks ago for a blockchain week. There's 9,000 people spending $1,000 a ticket.
Yeah.
You don't get that here for a ETF or gold stock conference. And now we have Consensus, which was in New York, went to Austin, is in Toronto, and they have something like 10,000 people attending it. So I think that we're seeing a big change, but I do see now the head of BlackRock saying we want to tokenize all the stocks.
Yeah.
And tokenize gold.
Okay, so it's the next generations are going to pick it up whole hog. I'll leave it there with you, Frank, but I appreciate you coming in. Frank Holmes is the CEO, Chief Investment Officer at U.S. Global Investors. Coming up, shares of